Hey, what's going on, fellow trade geniuses? This is Philip, and I wanted to delve into volatility a little bit more. Touched on it briefly on the 1 minute video just to kind of give you a brief idea of how that correlates to binary option premium. But in this webinar, I kind of want to get into different ways of looking at the VIX and how that relates to our binary trading. Okay, so as we touched on that last video, VIX is a volatility index, which is a measure of volatility in the marketplace, right? So this is a 1 year daily chart. Currently we're at 1154, and a year ago, roughly a year ago, we were in the 30s. So one way that you can look at this as it relates to how we are trading our binary options is to take a look at it from a perspective of being in different modes, different trade modes as it relates to where the VIX currently is. So let's look at it now with this overlay. So if we're up here in the mid 20s on up 30 and beyond, that's what I consider the gunslinger mode. And I call it the gunslinger mode because we'll have more opportunities to be able to get into various different trade setups because there's just more, the premiums are there. The premiums are higher, the premiums stick around longer. So we may find ourselves getting into trades where we're bracketing a position, in other words, or squeezing a position. So we're selling above the price and we're buying below the price because our probability engine is saying that the price is likely not going to go anywhere or stay in a range, and then we can get, like, say, a 40 pip bracket or 40 pip squeeze on that position, and it's all very high probability stuff. Okay, so we may have a couple of those on during the day for, say, like a 3 p.m. expiration or what have you. There's just going to be more opportunities because the premium is juiced because the volatility is high. I can tell you back earlier in the last year in February, having 40 pip brackets on was not uncommon, just because they're pricing in the volatility. Now, as things drop, I like to call this the target practice zone, and this is in here in the 20s to mid 20s, high teens. And target practice is you're not running into the saloon firing just because there's so many targets or opportunities, but you're focusing on less setups, but good setups. You're taking your time and you're waiting for things to develop. There's just not as many opportunities, and you want to be a little bit more careful because in gunslinger zone mode you can have a loss. You can have more losses, and it's easier to make up just because there's so many opportunities to make up. So you can be very aggressive in this zone. This zone you want to be less aggressive because you'll have less opportunities to make up for losses. And so it's just a matter of having really less opportunities. There's still good premium, and you'll have trades every day in this zone, but you got to be a little bit more careful, be a little more picky. Okay, now as volatility drops down into the low teens and below, I call that the sniper zone, because now you got to be very, very precise in your entries. And the reason for that is because the premiums aren't juiced anymore. What I mean by juiced is they're not as high. Okay, so they're going to start out lower and they're going to decay faster. So where you could have waited to get into a trade maybe 2 hours before expiration on an intraday contract, you might have to start looking at that contract 3 to 4 hours out. Okay, so the challenge there is that's more time for the instrument to move against you, and then as time progresses, probabilities change. All right, so it makes things a little trickier, and so you'll have to. And sometimes in this environment, you might have a day where the premiums are a little bit better, but when you're happy to get in farther out or earlier in the trading session and farther away from expiration, the more it increases chances of things going wrong in the trade. So ideally you hold out as long as you can, and because that's going to give you the most precise probability reading. But when we get into sniper zone mode in this lower lower VIX range, we got to be very careful. And so that's why, like in this week, we didn't take, I don't think we took one intraday high probability setup. Those are our 96% lifetime average trades. And we have to have those for the deeper in the money stuff because we're risking 85, for example, to make 15, or risking 80 to make 20. And that's fine to do when the probabilities are there, but it has to be a high probability setup. So that's why a sniper zone, the environment we're in now, we have to be very precise. We can't really make too many mistakes, or we go on a negative expectancy for a trade setup. And a lot of times our high probability setups just don't have any premium on it because they've just been crushed. There's just, you're not going to take something for $5 capture. It's just not worth it. So that's more often than not what happens, is that in a target practice zone or gunslinger zone type of environment on VIX, we'd be able to get into those entries because there'd still be premium on those high probability strikes. But in sniper zone, they're gone. Or there's a very small window, and I mean small window, to maybe get into it before time and premium decay against the expiration. So that's kind of the way I look at it. I think if you look at it that way too, you'll kind of get your mind right as far as what to expect on signals, and just even sizing too. Sniper zone, my sizing would be different on sniper zone versus target zone and gunslinger zone. Okay, so they go hand in hand. It's trickier down here, easier here, and we can be aggressive flat out. We can just be aggressive up here in this environment. Okay, so now what I want to do is I want to look at a pair and kind of just show you, as price develops against an expiration, how what we just talked about applies to a real world situation where we're looking at getting into a strike on a forex pair. So let's take a look at that. Okay, so here we have the USD JPY, the UJ, dollar yen, and if, say, we're in gunslinger mode, we could probably get into a trade early, like let's say 12 o'clock, and this line represents a 3 p.m., so we'll call that a 3 p.m. expiration contract. But we might be able to get into, because premiums, if we're in gunslinger mode territory, we might be able to get into a premium, that's down here, right? And our probability engine might say, hey, that's like 98% chance that's going to hold. Okay, so we'd be able to determine that. We might also be able to let time decay against us, and it might still tell us, hey, this is still 98% chance here. So it gives us more options, more opportunities to get into really good setups. Now, if we're in a sniper zone, what'll happen is at 12, we'll get, let's say we look at a probability, but there's no premium down here anymore. It's gone because the premium curve is tighter. Now, what that means is that beyond what you're trading at, the price here, they might only go a strike above and a strike below with any premium, and even that premium might not be good. So let's say at 12 we're trading, we close here at 115.37, so 115.40 is going to have a lot of premium. 115.60 might have $10 of premium, or 115.20 might have $10 of premium, or something like that, on a very low VIX environment such as what we have now. So the problem with that is now we're looking at getting closer to our prices. So if you're at 115.20 and it's 12 o'clock, that's not a lot of room. And as you can see, this thing can move. Let's just say, for example, we had premium at 115 at 12. Okay, but the problem here is that our probability algo might say, probably would say this is subpar trade setup, but it's the only thing that has premium. So we're either looking at getting into something that's subpar, but then we might say, well, hey, let's take it for higher premium, or we just pass on the trade. And like this week, we've just been passing on the trades because we're just not seeing premium on strikes that are acceptable to take. Again, this is for the in the money stuff. At the money trades, like our swing trades, it's fine because they can't really affect the at the money, because when price is on a strike, then it's going to be, that's where you're going to get your high premium capture of $45 to $50. And that's not going to change because that's the peak of the premium curve, right? So that's why we've been taking more swing trades, because, and that's just par for the course. If you're in a low VIX environment, you may only be looking at the money type entries. And if we're looking at the money type entries, we want a lot of time for the trade to develop. Um, there are situations where we'll take an hourly trade, because it's a very high probability. So we're taking a trade within the hour and it's expiring on the hour, and we'll say we're only taking it if it hits strike because the probabilities are so high in that hour. But that's more advanced stuff, and that's actually going to be stuff that we'll be doing in the advanced binary room. But I wanted to give you guys kind of a real world idea of how that affects how we look at entries. Okay, so right now, swing trades, that's fine. We're risking almost 50-50 in situations, and that's much more forgiving. And we have opportunities because we're able to get that premium. Low VIX environment on in the money stuff, where we want to get in at, that's acceptable to us, just won't have premium. And so getting closer to the strike doesn't do us any favors when it reduces the probabilities. Okay, so just those are the points I wanted to make. And if something's not clear to you guys, leave me some comments below or shoot me an email. My subscribers have my email, and I'll be more than happy to clarify any points on this. But wanted to give you kind of more in-depth review of my shorter 1 minute primer on volatility and binary option pricing and approaches to trade entries. All right, guys, thanks for watching. If you are watching and aren't subscribing to the channel, please hit the subscribe button. And like I said, leave me some comments or likes and let me know how you like the video. We put out videos just about every day now, so I think that if you're not a subscriber to the channel, you'll find what we put out beneficial, and it's free to view. All right, guys, take care, happy trading, and we will see you guys Sunday night. Bye-bye.